Hi and welcome to an Easy Trader Update. This is Kim speaking on Wednesday the 26th of February. Okay, looking at the euro dollar first, and as you can see we've just really consolidated for the last 5 days. We just sort of sat in a very tight range. Today looks to be little difference from where we are at the moment. It's just sitting there in this what it really is a wedge shape. I'll show you it clearly, more clearly on a 4-hour chart in a moment. What this sort of signifies to me is there is the potential for some further upside from these moves here. Of course, we've got prior resistance levels and we shouldn't obviously totally ignore those, and I'll just chuck them on the charts here at the moment, or pop them on even, and you can see the sort of previous levels around just over that 138 area, 138.20. It pushed through to, and there is a bit around about 138 as well. So anywhere around that area is automatic resistance. But if it can push beyond that, well, then we could see a run almost up to 139. We came just short of 139 last time. So there is some still potential for a push upwards. The momentum staying, the positive momentum, although we're sitting in this sort of consolidation pattern, the momentum staying with the move at the moment, which would suggest there's potential upside. If we look at the long-short ratios here, and effectively around about 75% or 74% of traders are short on the euro at the moment. And if you look at the table itself, we're sitting here, we've got in terms of open positions, there's all the shorts sitting below us taking some pain, obviously some longs below the current price sitting there, but net positions, if we start pushing up towards 137.50, we do run into this wall of sell orders. However, there becomes a point when the retail traders are on the big traders are on the other side of this and may actually start buying and forcing some of this short position to work its way out. So that's where we're sitting at the moment, and if that was to happen, that would help the case for the push up. Remember, retail traders are often wrong for long periods of time, and with 74% of them sitting short at the moment, we could see a short squeeze go on there. Okay, euro dollar. Now I'll show you the 4-hourly. There's the 4-hourly wedge sitting there, so you can see it quite clearly. If we did get the break, we could actually measure this wedge pattern. If we just take it from about here, that gives us around about an 80 pip shove upwards, and that sits us somewhere in the region of the 138.50 area. So not too short, not too far, a little bit through the level of the previous resistance there. So it's just pushing through into that monthly R2 area. Okay, so still bullish influence based on this at the moment. That doesn't mean say obviously intraday trades short are not available, and if we see a break of the bottom of this wedge, then my view may change, and I'll return to being a little bit more cautious about the euro and potentially further downside. Of course, we've got the inflation rate levels out later this week on Friday, which may give us some sort of guidance to analysts' views on what's going to happen to the euro. Okay, the pound dollar. Start looking off at the daily chart first. Again, consolidated where it's been here. The pound's running in. It found resistance at the monthly R2 pivot, which is not unusual. It's a sort of a key level in terms of where we are. And we've not got a lot of time left. We could see that being tested again with a push. Momentum's sort of dropped off a little bit here as we've gone through the month, or this part of the month. Looking though at a 4-hourly chart, and we've had this descending channel running through here. It's broken out. It's retesting that. That in itself could show some further upside. I'll just quick measure of that. It's around about 120 pips. Pop that onto. Is take the modest sort of level, and that could see us just running up a little bit short, and if we put it on the actual level where it did break out, it's pretty close to the previous highs there. So if we get some purchase on this move, it could continue to the upside there. momentum's still there on the 4-hourly point of view as well. So could see that push up. So as I say, it is a 4-hourly chart, but it gives us a bit of a picture. Again, if we look at the long-short ratios, and there's lesser shorts on the pound. It's in a more comfortable position in that sense. More possibility of traders being that would be a sort of a normalish figure, 65% short. Unless everyone starts getting really bullish when it's being sold off, but it gives it plenty of leeway for upside. It has got some resistance levels at these retail sales stops, which there is a reasonable amount of them sitting there above the 167 area, way above the 167, 167, 50, 40, 30, 40, 50, some of that region. But we've got to get back up to that area, so we're going to be sitting perhaps back around this sort of area, well, where my cursor is at the moment, for hitting some sell stops. But if the institutional buying comes in at that point, it may just want to push a few stops up and push it up to that double top there. Okay, looking at the dollar yen. Let's look at the dailies first. And dollar yen has still got a chance of hitting its monthly pivot here. Still some potential upside. In the bigger picture, it's probably we're probably seeing a weaker dollar. We've got this sort of again possibly channel or wedge pattern, sort of wedgy channel pattern coming in here. Would like to have seen it hit the pivot and then roll over from there, or maybe the daily 50, monthly daily 50, yes, daily 50, and maybe roll over from that sort of level. It is in this sort of flaggy pattern or step pattern here, flag pattern here, which may suggest it could run back to the downside at some point. As I say, at the moment, the momentum is a bit positive, so it may just get us up to short term. I would like to see it run up into that monthly pivot. Short term, and again, looking at here, we're getting a series of high lows, high highs at the moment. We've had this little ABC step correction. Perhaps if we can see a break of this 102.61 area, that could give us the chance then to run into the previous highs of 102.80 and up to that 103 area. Looking at the market's view on this, remember this is the dollar yen, so there's only 36% short on the dollar, so it's effectively 73% short on the yen, or long on the yen. And you can see the long position sitting in here. Long positions relatively to the short, so long yen is expectation effectively. That's short dollar, long yen. But you can see there's a pile of sell orders sitting below us here, so not looking the brightest for upside. Every time it seems to want to push up, it's just going to run into stops, but at some point it could just push through that. Okay, let's look at the Aussie dollar. And looking at the bigger picture here, we obviously saw the big sell-off. The Australian dollar is really at the whim of the. I mean, it's the nearest currency to the Chinese yuan in terms of it's so tied and so reliant on the Asian markets, particularly China. And as China sneezes, the Aussie catches the cold and is sold off over the recent months. It's seen a bit of a bounce here. There is some potential for it to run up, but it needs to break past these highs. It's on the more bullish side of its monthly pivot, but struggling all the same, and we've been just consolidating very tightly. And to me, it looked like it could consolidate some more unless we start seeing some really poor news coming out. And I mean, in the short term, it seems easier sometimes on some of these days just to sell off. We've lost the 4-hour momentum. The daily momentum, I should have just pointed that out, it's waning, and it looks to me like it could just be rounding off. One of the things that might just hold it into that range, it may just stay in that range. When you look at the short ratio, only about 40% short on it. Open orders quite neutral. I mean, if it gets back up to the 90 area, 90-50 area, we could see some sell orders coming in, stopping places. But you can see the positions are quite neutral effectively between longs and shorts there, so it's not such a potential squeeze opportunity one way or the other. So my position in terms of really stays neutral unless we can get a break above these highs, in which case we could see a bigger correction. In terms of the just a quick check on the fibs here in terms of this retracement we've seen. Yes, I'll just move that at the last second there, but it's just running into that 38% retrace with these highs here, and that seems to just be holding it. So if it can get a break, perhaps then we could push up to the 50% and the 200 MA. Okay, that's it. This is Kim Watson for Easy Trader. Have a great day, great week. Bye for now.